So is it too late to get into the trade after this recent run? Joining me now is Lance Wilkes, Bernstein senior research analyst. Lance, is there more to this, or is this just a beleaguered sector having a bit of a bounce?
Well, I think it's certainly benefiting from a rotation right now, but I think this is really early innings. You've had about 3 years of underperformance in this space. You take a name like United, margins are about half of kind of normal levels, and multiples are down 20 to 30%. So when you look at those sorts of things, you're really getting the behaviors of sort of a cyclical industry or a cyclical recovery in a sector that traditionally is non-cyclical. I think that makes it really attractive.
What should investors make of the difference between how the more biotech, pharma side of this area is performing versus the insurance side?
You know, I think on the insurance side, what you've really seen is a pricing cycle. And that's been compounded by some unusual things with COVID, where you had sort of a supply shock, a compression of utilization that then bounced back, and everybody, used services at a more rapid rate than as usual. And that was compounded by a pricing cycle, excessive competition, some rate shocks from the government. And now you're going through a repricing in these spaces, cutting of benefits, increasing of rates, and things like that. I think that's a really attractive space on the managed care, healthcare services side. I think over on the other areas within healthcare, what you're seeing is, greater durability in earnings, policy that is really not ending up being that difficult or that painful for some of the areas. The GLP-1 announcement of the other day, obviously opening up new markets. So I think there's a lot of positives in this space. I think, in general, the services or managed care subsector is an area that is probably just beaten down much more and has, more opportunity to run.
You think we're going to see an increased disparity between the drug side and the care side with an older and arguably sicker population coming?
I think the big thing you'll see on the care side with these is, for a lot of the care and services side, you're going to see two things. One, that older, sicker population puts greater pressures of affordability on the ultimate payers. And those payers are employers, so it's just like Verizon that you just mentioned about. Obviously, compensation costs, premium increases are getting towards double digits. That's a big pressure, especially in these kinds of economies. And then the government and, obviously the subsidies, part of the shutdown, those are big impacts. And so I think the services that managed care, ultimately PBMs, things like that, can provide are going to be very important on a go forward. What you'll see with a lot of that is those are going to be things that are going to get tailored to those populations. You're seeing a real retrenchment in top line right now. You'll probably see a recovery in margin. I think for the other sectors, what you're going to see is durable demand. And you're going to see, kind of high consistent growth levels across healthcare. And the difference in the healthcare services side is they're really beaten down, and their objective of trying to control those cost trends is going to be more and more in demand.